Endurance Tech reported an inline performance in Q4 with expectations amid the overall weakness in the two-wheeler industry and lockdowns also due to the COVID-19 pandemic. In our ideas for profit today, I'll discuss whether it is a good idea to get into a good stock while entering in a bad time. Well, let's look at the broad earnings highlights of Endurance Tech first. Now, the net operating revenue actually declined by 15.6% on a year-on-year basis due to the decline in the India business as well as in the Europe business. Now, the Indian business declined by 13.7% due to a decline in the production of the two-wheelers. But Endurance Tech still outperformed because the industry had actually suffered a more severe production decline of 18.4%. Now, EBITDA declined by 24.6% year-on-year, but its EBITDA margin contracted by 181.1 basis points. The margin contraction was led by an 89.3 basis points contraction in the India business due to the higher other expenses and a 340 basis points of contraction in the European business that was led by the negative operating leverage. Now, the two-wheeler industry was already operating in a tough environment even before COVID-19 struck. The pandemic, however, brought everything to a grinding halt for some time. However, after the easing of the lockdowns, there has been a sharp recovery in the two-wheeler sales. For instance, Bajaj Auto and Hero MotoCorp volumes in the month of June were 4 times their May number. Now, we believe that the situation is likely to improve from here on as the production at the original equipment manufacturers front has resumed at a decent pace, and there is this pent-up demand as well, which will work in favor. Now, in fact, Endurance Tech is expected to outperform the industry by acquiring the new clients as also by increasing its share of wallet from the existing clients. Now, it acquired new business worth 586 crore rupees in FY20 from HMSI, Hero MotoCorp, TVS, Royal Enfield, Hyundai and Kia Motors. Now, half of these orders should see execution commence in Q2 of FY21, that's the current quarter. Now, the management also said that the projects worth 1,200 crores were already at the discussion stage. Now, additionally, it also won business worth 42.7 million euros in FY20 from foreign players like Porsche, BMW, Audi. And the order wins also give the companies the earnings visibility in the medium term. Now, the management is focusing on cost efficiencies, higher value-added products, and also on the import substitution to improve the operating margin right now. Now, the focus areas include 200cc plus bikes, clutch assemblies and brakes, paper-based clutch assemblies as well as the advanced suspension, etc. Now, further, they have also carried out backward integration into the aluminum forging axle clamp for front fork and wire-grade hoses for ABS brakes, which will aid the improving operating margins going on from here. Weak demand and uncertainty due to COVID-19 has seen the stock price fall 23% from its 52-week high levels, making the valuations appear more reasonable at this point in time. While these valuations may seem still expensive due to the pressure on its performance, and they are also justified actually given the company's stellar financial track record that we've seen in the past. Investors can therefore look to accumulate this stock in a staggered fashion.